if you base it on the dividends that they gave out last year, let's just say it's about 13 pesos. So if you'll try to divide it, that would give you about 3.66%. So what does that actually mean? If your goal is, I want to get at least 5% dividend yield, based on the dividends that they gave out in 2021, it's 3.66% based on the price of 355, then it should not be a buy for you, because if your target is 5% dividend yield, it's lower. Hey guys, so in this video, let's talk about dividends once again. What's interesting, over the past few months, I've been seeing more and more people loving dividends. As you all know, I'm a big fan of trading, but I'm also a big fan of dividend investing, because dividend investing gives you the ability to have predictability of returns. It gives you the ability also, even if the market is down, to have cash flow come your way. And this is truly what passive income is, that it doesn't matter, you don't even have to sell it, but you have the ability to have cash coming your way. I posted a video talking about dividend investing over the past few days, and I got a question from one of our subscribers asking for a deeper dive on Meralco dividends, and I want to answer that. If you're new to this also, if you guys have any questions from stocks to crypto or anything else in between, put it down in the comment section, and I'll try my best to be able to feature you guys for the next videos if you have something very interesting that I know that people could get value from the questions that you guys have sent as well. So this is a question coming from JRed333. Too bad I unloaded my Meralco shares last week when the market was down. I should have held on to them. Anyways, thanks for this video. Time to start reading books, which I purchased from Shopee 2 weeks ago. Thank you so much. I wonder if it's okay to buy Meralco shares sometime soon. That's why I'd always say this, that if you are a stock market investor, it's so important that you learn how to separate your portfolios, that you have a portfolio for long-term growth investing, or you have a portfolio for trading, regardless if it's position trading or quick trading. But you can also have a portfolio for dividend investing. That means that if you have a portfolio for dividend investing, that actually entails that the main goal on why you have that portfolio is to buy stocks, that your main goal for them is to earn off dividends, that it doesn't matter if the stock price would dip, you don't have to panic sell. Even if you bought it lower and it went up and you have a gain also, and you might not be able to materialize on that gain very much because of the dip as well. What you need to remember, and what you need to realize, and what you need to focus on, is that the longer you hold on to that dividend stock and the more volume that you get, the name of the game when investing in the stock market is building a massive base, is building large enough volume, life-changing volume, that when you're invested, the dividends alone would be enough already to support your day-to-day living, to support all of the expenses that you actually have. If your goal and that particular portfolio is mainly off of dividends, if the market drops, if the market dips, you don't actually need to sell, because as long as the cash flow is enough, or is what you've targeted to actually get, then you don't have to hurry, you don't have to rush, and you don't have to panic to also liquidate your position. The only time you liquidate your position, the only time you get out of that position, is that if you are not satisfied already with the dividends that they're giving out, meaning they were giving out dividends consistently, and because something happened, maybe in the fundamentals of the company, or maybe the shift on their policies as well, or what they want to do with the money that's on their way. Please do note this, that every time you enter into companies that give out dividends, if it's a common share, they don't owe you anything that they should give you a dividend on a regular basis. They don't owe you anything that it should be at least above this rate of return in terms of dividends. It doesn't work that way. So if the dividends that they're giving out is not any more satisfactory for you, if the dividends that they're giving out is not something that you enjoy anymore, or it has diminished, or it has dropped by a very, very large degree, then by all means, it's okay also to get out of that position. But if the only reason why you're getting out of that position is because the stock is down, then you're selling yourself short. It's not something that would allow you to maximize the reason and the mentality of having a dividend portfolio. So I highly suggest this to everyone that wants to enter into the stock market and purely want to invest based on dividends. The main goal, the main narrative is, if it goes up, or if it goes down, it doesn't really matter. As long as the dividend that you're getting is based on what you set out for, then you're supposed to be okay. You can hold. It should be even a greater foundation for you that if it drops, it goes lower, you can buy more because your dividend yield will become higher and your cost of acquisition would be at a much lower point as well. So my suggestion, create a separate portfolio primarily for dividends. Create a separate portfolio that its main goal is to build a base, accumulate, and stockpile, not really just to sell off when it goes higher. Now, to answer the second half of the question, is it okay to buy Meralco now? What would be the main reason or rationale to be able to buy Meralco? Similar to what I said in the previous video, set a dividend yield that works for you. Set a specific amount, set a specific dividend that this is what I want to get as a return, regardless if it's 4%, 5%, 6%, 7%, 8%, it doesn't matter, but it should be a dividend yield that is acceptable to you, is something that matches you as an investor. The next question there is actually this: based on the current price of the stock and assumptions on what will be the dividend for the year or even for the next years, will it hit the dividend yield that you want? If the answer at the current price is yes, then even if it's higher and it has dipped a bit, you can start to buy. But if the current price right now, even if it has dipped, the dividend yield is not yet at par or higher than the dividend yield that you want to get, then don't buy it. It actually means that maybe you have to wait for further corrections before you could actually stack it. Let's give an example. By the time I'm recording this video, the stock price of Meralco is 355 pesos. So that being said, that's your cost of acquisition if you want to actually buy it. I'll give you two scenarios in terms of how Meralco actually is. If you base it on the dividends that they gave out last year, let's just say it's about 13 pesos. So if you'll try to divide it, that would give you about 3.66%. So what does that actually mean? If your goal is, I want to get at least 5% dividend yield, based on the dividends that they gave out in 2021, it's 3.66% based on the price of 355, then it should not be a buy for you, because if your target is 5% dividend yield, it's lower. Let's try to make some forecasting in line with this now. So last year, they gave out a dividend of 7.8 for March 2021. This year, they gave out a dividend of 10.2 for March 2022. Let's try to assume that they increased the March payout by 3 pesos. That what if they also increase the total payout by 3 pesos as well? So instead of giving around 13 pesos total for the year, they would give out 16. So this is just me trying to give you some scenarios. This does not mean that this will be the output or the outcome of the dividends of Meralco, but I've tried to give you a scenario that what if they gave out 10 for March and then they give out 6 pesos for August, then that would entail 16 pesos. So if you try to compute it, 16 divided by 355, that would give you around 4.5%. So what does that mean? It's still below the 5% mark. It actually means that in spite of us already imputing a higher rate of return for Meralco's dividends, it's still below 4.5%. And please do note, no, by the time I'm recording this, it's June 2022. That actually means that the March 2022 dividends, you won't be entitled to that anymore. It's just us forward looking that should they give 16 pesos for next year, you would be able to get around 4.5%, which is lower than what we're trying to simulate here at the 5% mark. That being said, also, the mentality there is when you look at it now, you get 4.5%. Whatever you get this year, that's a dividend, that will just be your bonus. But you're already looking at what dividend you would get for 2023 based on the price that you're getting it now. So, twofold approach: set a dividend yield that's acceptable to you. If you're asking what's acceptable to me, I want something at least 5%. You don't have to copy me. Yours could be higher, yours could be lower, but please set that. Then next narrative is look at the price, make some estimations or assumptions on the dividends that they're giving you. If the dividend yield that you will get is above the target that you set out as a standard, then you can buy it. Even if there's corrections, even if the market is bearish, even though it hasn't really dropped significantly yet, or even though if it's relatively higher, as long as the dividend yield is acceptable to you, then by all means you can start to stack and buy and accumulate already. However, when you start to compute it, it's lower. Wait for it until it drops lower to the dividend yield that's acceptable to you. I hope you guys got a lot from this. I hope that this was something that was interesting and insightful for all of you. If you want to know more, this entire concept of dividends is under fundamental analysis also. If you want to know more about fundamental analysis, you have 3 ways actually. Number 1, I've written books about it. Links are in the description below. Number 2, I've created hundreds of videos about it. Links are in the description below as well. And number 3, I have a fundamental analysis course. It's recorded. You can watch it at any point in time. It's hours and hours of videos. Its main goal is to help you analyze companies, to figure out if they're good, to figure out if they're worth coming into, to figure out if they're cheap, to figure out if they're growing, to figure out if they're expensive, with one goal: to give you conviction, to analyze companies based on the numbers, based on how the company is going, and to be able to help you decide the companies if it's worth buying or not on your own. If you made it up until the end, appreciate it if you could like this video because it helps the YouTube algorithm. And if you could subscribe as well and share it to your friends that want to know more about investing. It's time that we change the narrative for Filipinos that investing is cool, that investing for the future is cool, that it's one of the most important things that we could ever do, we could ever think of, that we grab a hold of our financial future and our own financial destiny as well. That's it for now. I hope this video helps you trade well, trade strong, trade smart. See you all again soon. God bless you all.